So today I want to go over what I believe to be one of the most undervalued markets in the world right now, and that is Brazil. So if you want to see some stocks with over 20% dividend yield, make sure you stick around till the end. But let's dive right into this BlackRock ETF. Now, I don't suggest this company or this ETF, but it gives me an idea of some of the characteristics of this overall market. So overall, you're getting a 9% dividend yield. So in theory, if you start to dive down into some of these individual stocks, you can find ones with even higher yield than that. And before I look at the individual stocks, I like to compare currencies. So you can see the Brazilian real has lost value over the last several years against the US dollar, but that trend does appear to possibly be reversing. At least in the last couple of years, the dollar has been losing value against the Brazilian real, and with all the issues in the economy, we will see if this trend can continue. So let's start with the lowest yielding stock of all of these stock picks here. By the way, I am currently buying many of these stocks. I do hold them in my personal portfolio, including Ambev. So this is a beer company. PE ratio a little under 15, price to book a little bit higher, close to 3 here. Current ratio a little bit under 1. I personally like to see that at least 1. But look at that debt, less than 5% debt to equity, so in really good shape there. This is the 5-year chart. You can see 5.6% dividend, so not bad. Pretty steady here, giving you time to accumulate, and looks like at a short-term bottom. Look how high this was back in 2013. So just something to think about. Put it on your personal watch list if this is your style. Copel. I really like this company. I've held this for quite a while now. So this is an electric utility company. Price to book around 1, so pretty fairly valued. Depending on how you look at this PE here, including or excluding extraordinary items. Current ratio, pretty good, 1.3. Reasonable debt, not too bad, especially for a highly capital-intensive utility company. This dividend was recently lowered. The yield is slightly lower than it was a few weeks ago. You can see you've got kind of a rising wedge here, so technically a little overbought. But slow and steady climb up, close to resistance. Will this break through? Personally, looking at the potential growth in the future for Brazil and the amount of electric they're going to require, I think this is a long-term play. Only $5 billion for the whole company. So I think over time, this is going to be really highly valued. They're also in hydro, wind, solar, all that. So definitely a good long-term potential here. Vale, mining company, a big iron and iron ore. Price to book of 2. Pretty good PE of 5 there. Current ratio of 1. And for a mining company, relatively low debt there. So 5.91 dividend yield. Looks like at a short-term kind of base here. Personally, I think it's reasonably valued. I mean, these things go through ups and downs. Definitely they can be cyclical. And I think that could be an opportunity to buy something like this during one of those downturns. So, Bank of Brazil, price to book 0.6, PE less than 5. With banks, it's a little different the way you have to look at these. So, the current ratio 0.5, and of course, for a bank, really high debt. But pretty interesting. First, we'll look at the chart. You know, been grinding higher and higher, 7.43 dividend yield. But even if you just look at Wikipedia, the oldest bank in Brazil and among the oldest banks in continuous operation in the world, it was founded by John VI, King of Portugal, in 1808. So you think this might be around for a while? It's pretty interesting. I personally don't buy bank stocks, but again, this thing has been around for quite a while and will probably continue to be. So CMIG, this is again another utility company. Price to book 1.23. Again, these PEs much lower than you're going to see in U.S. stocks. Plus, really, they need the capital in places like Brazil, and they're rewarding you with much higher dividends. Current ratio 1.2, 54% debt to equity. So again, grinding higher up towards kind of a resistance point here, but again has been much higher in the past, around twice as high as it is now. Dividend yield 7.85, and with a payout ratio, definitely a very reasonable payout ratio of 41.31%. Gerdau, so this is one of the largest steel companies. I think it is the largest steel company in the Americas, if I am not mistaken. Price to book 1, again PE 4.5, current ratio 2.32, so that's really good, and with pretty low debt for, again, a capital intensive company. And again, see, even Wikipedia, it's telling you largest producer of long steel in the Americas. So pretty stable over the last several years. 13.21% dividend yield. So getting to these higher dividend yield. 2 more stocks to go, so make sure you stick around. These are the highest yielders of all of these stocks. So this is Petrobras, oil company. Price to book 0.88, PE around 3%, so pretty crazy. Current ratio 1, and debt to equity of 77%. So here again, 23.24% dividend yield at the moment. This thing was up to 40 something percent, I think, back here not too long ago. Pretty steady. Again, all these charts are pretty similar, and you can see how high some of these companies were in the past and may again be in the future. So SID, again, another steel company, one of the largest in Brazil. Price to book of 1, PE undetermined, so they may be down this quarter. Current ratio 1.36, and pretty high debt here, but with a 31% yield, really high yield there. And again, this thing has dropped quite a bit. Can always continue to drop, but a lot of those losses have been taken here, from $9 down to less than 2.5. So just some ideas. Personally, I'm looking outside of the US to try to find better value, as clearly the market is overvalued here. So if this was informative, don't forget to like, subscribe. I'm not monetized, and I realized they're putting ads on my channel, and I cannot take them off until I have the ability to, through this monetization, where I can actually remove some of the ads, which is counterintuitive. So if you want to see more of this content without ads, go ahead and subscribe. I really appreciate it. Take care, and I will see you in the next one.